Hey traders, this is Blake Morrow with Traders Summit, and with me today I have Mr. Richard Matthews from One.io. How you doing, Richard? Good to see you.
I'm very good. I think I've got a little Chili, my little dog, barking in the background, who wants to join in and give her views on the market. So
You
she
know, it's
may want.
her views are probably better than ours. How about that?
I expect so. Yeah.
Well, let's talk about that. I mean, we've gotten through the bulk of hearing from the central banks, and I mean, where's that leave you right now? I mean, the dollar's still pretty strong. I mean, but
Yeah.
it's obviously you got cable breaking higher a little bit. You got the euro, back above 107. It
Yeah.
looks like the dollar could maybe some damage come around. What are your thoughts with the markets here?
I think going through the central banks, the Bank of Japan, always the hardest one to read. They are inscrutable. Yield curve control is dead. I think you're going to start seeing interest rates. I don't know, interest rates go higher in Japan. They can't go any lower, but they're certainly starting to twiddle around with them a little bit. The Fed was as we expected. I think that you are going to see high for longer. I still have a sneaking suspicion you're going to see another hike from the Fed December, January time. I'm well in the minority about that, but I think the non-farm figures weren't bad as people were calling. You're still creating 2 million jobs a year, which is, exceptional. Jobs number is okay. Unemployment edging up, but I think it's still way from the 4.5%, which will concern the Fed. And the interesting thing to me is they're letting the long bond, the 10-year, do the heavy lifting. So what happens if the long bond, if the yield suddenly starts dropping on the long bond and people go, I'm not sure yet, what's the Fed going to do? Does it have to hike rates because the long bond's not doing the heavy lifting anymore? And you've seen quite a rally there, although 4.5% seems to be the floor, doesn't it, for the bond? So I thought the Fed's probably the most interesting one. And in a way, the clearest one. The ECB, they're not going to do anything. I think they're going to be the first to cut. And the Bank of England is just whittering away in the background. They don't know what they're doing, so why should I? I still am a bull of the dollar. I'd be long in the dollar and short of the euro, just purely because I think Europe is really in a bad way. And America just keeps creating jobs, and that economy is unbelievable.
I don't think they're going to let you in France the next time you try to go. I'm just saying that. I'm just saying. It is interesting with the market. The markets do seem that everybody's just kind of like waiting for who's going to be the first central bank to suggest that there is a cut coming. But as you pointed out, U.S. data continues to be pretty darn good. I mean, we all called it last week. That's kind of you use the term loosely. It's kind of like the porridge, it's Goldilocks, if you will. It's like the data was worse than expected, but it wasn't cold.
No, that's right.
It's making the job hard for the Fed, right?
Yeah, but then again, it amuses me all these central banks go, we're data dependent. We're watching the data. Well, you didn't read the data right when inflation was coming. You ignored it then. Why should I believe you're going to get it right now? So data dependent, yeah, maybe. I also think that you've got this dreadful situation in the Middle East between Israel and Hamas. I still believe that could well get worse. I think America will pour arms into Israel, and it will continue to pour arms into Ukraine. It's going to have to print more money to do that. The deficit, it ain't going to shrink. So I think you're going to see plenty of supply coming into the bond market, which should push prices a bit higher.
Well, speaking of which, we had a I believe it was a 3-year auction yesterday, and demand was pretty good on those shorter term bill notes. Are they notes? No, they're bills. Or they're notes, because bills are less than a year. But we have 10-year notes that are being auctioned off today. And do you think that supply is just gonna come back in force then?
Yeah, I mean, you've got 10 years today, and I think you've got a 30-year tomorrow.
Correct.
The refunding announcement was a little bit more positive than people were expecting. yeah, they're still huge numbers.
Yeah.
Let's be serious about it. They're massive numbers, and that supply isn't going to shrink, and it's going to keep on coming. And sooner or later, we have what's called a buyer strike here in the UK when buyers stop buying gilts. And you can see that almost, you wonder if that's going to start happening in the States and whether you get a downgrade. I hate to say it, are we going to get a government shutdown looming? Is that going to happen? I think there's I can't see many reasons to buy the 10-year at the moment, put it that way.
Yeah, government shutdown. I mean, what's that going to do for the market? I mean, I am going to assume that we're a little numb to the whole situation, but you never know, right? Richard, since we're sitting here waiting for central banks, and you still feel that the dollar, you should be buying dips on the dollar. Is there any place that you'd like to be short? Let's say the sterling or the euro.
I think probably the euro, actually. The figures coming out of Germany are pretty horrendous. The French are saying that inflation's beaten, it'll be the first war they've ever bloody won. Sorry, being very British about that. I think Europe has got big problems. I think Germany's got big problems. We're coming into winter now. Germany is terribly dependent on Russia and energy from elsewhere. So I think the German problem is going to get worse. I think the economies are worsening there quite sharply. And I think that Europe will be the first to cut. Hence why I'd favour being short of the euro, long of the dollar. Sterling, who knows what the Bank of England's going to do? I don't think they know, so why should I?
Yeah. Okay. Well, there you go. Now, you work at one.io.
Yeah.
Which you shared with me just before we started a little bit of information about Bitcoin. You want to elaborate on that and with the people here that are listening in on.
Well, I'm rapidly learning about cryptocurrencies, which is fantastic. In actual fact, the use of them and the use of Tether particularly is actually probably much more widespread than I'd realized. And I'm just starting to wonder, having watched Bitcoin a little bit and seen it sort of rise up, and I'm just wondering whether people are starting to use that now instead of using gold, because for years and years and years, people would buy gold just as a safe haven. And I wonder if people are starting to use Bitcoin now. And it was pointed out to me that, and I'm actually reading, it's why I'm looking away, more than 700,000 new Bitcoin addresses have created in a single day. So that makes me think there's some people out there buying Bitcoin, and it's retail buying. This is not a recommendation to buy. I don't know nearly enough about it, but it just really interested me that number, which is a huge number, has been published, and whether that you will see Bitcoin suddenly start spiking up, and whether it's people saying, okay, well, if it really does go pear-shaped in the Middle East, I'm going to buy some Bitcoin and I'm getting myself ready to do it. It's
interesting you point all that out. You can see I've got a chart of Bitcoin, and I want to show you a couple of key technical levels that are being hit. Take that high to this low. Basically, we're stopped at the 38% retracement. It's also the 161% extension of this move right here, comes in right at the same level. The 50 and the 200 DMA have crossed, which they call that a golden cross, which it provided a little bit of upside the last time that had happened, actually a little bit further than that. So it's starting to trend higher, and I guess the question is, do we break out? And if we do, is there some recovery in store for the Bitcoin market here? And that makes a lot of sense. A lot of new accounts being opened, and I'll tell you something, Richard. When you talk to a different generation, like you take my kids who are both driving college-bound teenagers, young adults, you ask them, would you buy gold or Bitcoin? They're like, why would I buy that rock that sits on my desk, or put in Like, why would I do that? I mean, if Bitcoin can keep its ability to just be a store of value in people's minds, why can't it take some of the share from gold?
Something to shine off gold.
Yeah,
There you
there it is.
Yeah, you don't mean well enough there. I always see some odd things and pick out some odd points, and something like that just sticks out in my mind. Why are people doing that? Are they just? I'm really nervous about Israel and what's going on there, and I can't see a world where that ends quickly. Peacefully is the wrong word, but I can't see where it ends in a good solution that anyone's going to be happy with without a lot more bloodshed. And I just wonder people are getting ready for something, really nasty to happen, and that's why they're getting their Bitcoin addresses.
Well, I think it's entirely possible. So, well, thank you very much for sharing that information with us. And for traders, what's the best way to follow your work?
You can follow me on LinkedIn at Dickie Matthews with a 5 at the end of it instead of an S, or at 1.io, or give me a thumbs up on here, and you can always email me. I'm always happy to chat.
Well, thank you very much for spending your time with us, Mr. Matthews. I always look forward to our weekly talks here. So if you like what Richard has said, make sure you give him a thumbs up, subscribe to the channel down below so you don't miss any of this content. Richard, have a great week, and good luck out there, navigating through the eye of the storm.
But the crossfire hurricane, again, no Rolling Stones. Great to see you, Blake. I'll see you soon.
Great to see you. Bye-bye. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.